The NYU Hospitality Conference is taking place today. Industry leaders are going to discuss the impact of tariffs on tourism and lodging, among other topics. Joining us now is one of those industry leaders, Arne Sorenson, President and CEO of Marriott International. Great to have you on set in New York. First off, how's your health? How are you feeling? How are you doing?
I feel great. That's actually one of the things that makes this battle a little bit surreal. Is I almost wouldn't know I'm fighting it, but I'm in the midst of round 3. Starts tomorrow of chemo, so it's good to be engaged in the battle, and we'll take it a day at a time. But I feel great. I'm working every day, and looking forward.
So I was mentioning off camera, so I'm like a big Marriott Bon Voyage type How many hotels am I trying to figure out with Marriott? Are you sure this is the right way? There are so many different brands now.
Yeah,
I'm confused.
Think about it this way for a second. Bonvoy, of course, is the name of our new loyalty program. It's the umbrella that wraps the 30 brands and it's
30 brands.
30 brands, 7,000 hotels. Sounds big when you think about an individual company, but think about comparing that to Expedia, for example, what they offer on their site, which is something like 400,000 hotels. And we think by bringing the loyalty program and wrapping it around and offering a breadth of choice, whether it's a luxury hotel or a mid-market hotel, whether it's Poughkeepsie or Paris,
that's good.
We end up with a choice where customers can basically say, I don't need to look at those other sites. I can go to Marriott and I can get the full range of choice.
The analyst community is 100% behind. 50% think it's good to have so many brands. You've had, is there some criticism that it's not focused?
I think it's nearly 100% behind us.
Okay.
Yeah, and when it'll be interesting to see the tone at the NYU conference, which is the biggest hotel show in the world every year. I think since we announced the Starwood deal a few years ago, which got us meaningfully bigger, the industry's sort of been looking at it, assessing how it's going. I think it's going pretty well, but I think everybody understands the theory is the right theory.
So the latest numbers, you beat pretty handily on as far as earnings, but the revenue was less than expected, just based on, I think, based on the global.
I think
zeitgeist.
We're about 2/3 U.S., 1/3 the rest of the world, and I think when you look at the economy broadly, obviously it varies from place to place around the world. The U.S. is steady but moderate. So if somebody's looking at the U.S. economy thinking that it is just rock and roll and we're posting sort of record numbers all the time, which felt like the case in January or February based on the markets, it feels less the case that way today. Actually, you look through that, and what we see is steady growth of sort of 1.5% to 2% same-store growth, which is not great shakes, but it's up. That's a good thing. And obviously, that impacts the global numbers in a way that makes it for moderate growth as opposed to real bullish growth.
I would have thought that labor would have affected your expenses more so that you weren't able to manage lower revenues to better earnings. I would think that it would be tough to manage expenses right now.
So
it's a tight job market.
Because of the tight job market and wage increase. I like wage increases.
Point.
I mean, but you're seeing that, aren't you?
The industry as a whole in the U.S. in the fourth quarter of 2018 had 4.5% wage growth. So that's countrywide. That includes not just the markets with the most pressure on labor, but every single market average.
So how'd you do it then?
Well, you do the best you can to drive some efficiencies and use technology and use other tools. But it's a tough challenge.
Arne, let's talk a little bit just about where you've seen growth slow. If growth is still coming, but it's slowed down from January and February, is it because consumers are less willing to spend or because business travelers are less willing to spend? Yeah,
and again, I would characterize it more as steady as opposed to slowing. Maybe a little bit more moderate in the early part of the year than the market might have thought, and now maybe a little bit more positive, I suppose. I don't know. It's hard to tell what the market thinks at the moment. But sort of it's a through line that is fairly steady. I think the consumer is still fairly robust. I think we're seeing international arrivals to the United States decline, or certainly decline relative to the growth of the rest of the world.
And you think that's a function of what?
Well, the Chinese are certainly down.
Right. And you think that's a function of the trade war?
Trade war, welcome, yeah. With respect to the Chinese, without a doubt. In the first quarter,
welcome, that they don't feel welcome.
They don't feel as welcome in the United States.
Is that slow markets like New York or
it impacts
LA
the coastal markets more than anywhere else.
And what about U.S. travelers to China?
U.S. travelers to China has always been more about commerce than about tourism.
And so
Chinese travelers to the U.S. has been more about tourism.
But I would think that then also things might have slowed down.
Yeah, I mean,
U.S. business travelers to China.
Yeah, although China is obviously a big country.
Right.
It's a big economy. I was there in early April, I guess. I looked at the new Bulgari in Shanghai, which is the highest rated hotel in the city. 80% of that business is Chinese already. And when you think about ultra luxury in Shanghai, which is the most global city, the dynamics in China are more about the Chinese economy than they are about the U.S. manufacturing supervisor going to China to see their plant, for example, which undoubtedly is down. I would guess is down.
Have you pulled a single lever in what Marriott's plans in China based on the trade dispute? Have you cut back on any? I mean, you're building hotels there constantly. Have you made one? Has there been a single thing different about how you've approached it in the last 6 months?
I don't know that we've changed anything about the last 6 months. We're about 350, 360 hotels open in China, and we're opening 1 or 2 a week, probably something like that. They tend to be at the high end. So we've got a very strong position in China. The overhang of the trade negotiations is relevant, at least relevant in the way we worry about it. I think we'll watch it carefully. Our industry has not really been impacted by trade issues in the past.
Really.
So we don't need protection for the hotel business.
See, the uncertainty that we hear about.
But the overhang is going to be a problem.
But it would cause people to maybe do something different, but you haven't done anything different.
No, remember, every hotel we've got is with a Chinese partner. So they own the real estate. We manage the real estate for them. The bulk of the economics are already Chinese, even though our business is 100% ours. It means our business looks a little less foreign, I suppose, from Chinese eyes than it might have otherwise.
How's that cool?
And we're not strategic. You know, we're travel. We're not about a banking system. We're not about a highly regulated system.
How's your cool Times Square edition thing going?
The edition's doing great.
Yeah.
In fact, spectacularly well. The food and beverage numbers are off the charts.
It's a cool place to hang out.
Yeah.
They're planning this out, but I was going to ask you about security costs. Are security costs going up at hotels?
Security has been, today compared to prior, some markets I'm sure the answer is yes.
Yeah.
Algeria, for example, I was there last fall.
But it hasn't changed in the United States?
It hasn't changed meaningfully in the United States, no. Of course, we've ramped it up a lot in the last 10 to 15 years.
Right.
And I think it's basically steady.
Okay.